In this presentation, we will take a look at multiple choice questions related to governmental accounting, going through those questions and then practicing test-taking skills with them. First question, which is not true of capital projects fund? Either A, used like a construction work in progress account to record costs until the project is completed, or B, encumbrance accounting is often used, C, use the modified accrual basis of accounting, or D, capital projects fund have a project life focus. Let's go through this again using the process of elimination, which is not true of capital projects funds. Either A, used like a construction work in progress account to record costs until the project is completed. Now that sounds like it would be a reasonable thing to do, but that's not typically how the capital project is used. So I don't think it's going to be A. So let's go through the rest of them. B says the encumbrance accounting is often used. So do we use encumbrances? Capital projects fund is obviously not the entity-wide level, the government-wide accounting, which uses the normal accrual basis. It uses the modified accrual because it's the governmental accounting. Encumbrances is a funny account, not on normal accrual as it would be on the government-wide, but is on some of the modified accrual basis, and therefore I would think that it would have encumbrances because we're in the fund accounting as opposed to the accrual accounting. C says use the modified accrual basis of accounting. Also, I believe true because it's capital project fund, governmental fund, therefore using the modified accrual basis. D, capital project funds have a project life focus. So I may not be fully sure of that between A and D, which is not true of the capital project fund. Either A, used like a construction work in project account to record costs until the project is completed, or D, capital project funds have a project life focus. And of those two, I would think they would have a project life focus because you would think that you're going to start the capital project fund at the beginning of the project, whatever it is, the thing you're building, and then end it at the end of the project, because then what would you put in the capital project fund once the project is done? So I think D would be correct. A sounds like a reasonable use. You would think, well, maybe it's like a work in process type of thing if you don't know a capital project fund, but that's not exactly what it's used for. We're actually going to be tracking kind of the work in process and the government-wide activities, like the entity as a whole type of activities in the work in process, and any related schedules to it would then be tracked at that level. The capital project fund is going to be more on a flow type of basis. So actually A is going to be the final answer, which is not true of the capital project fund. A, used like a construction work in progress account to record costs until the project is completed. Next question. Which would not record depreciation of capital assets? Either A, capital projects fund, B, internal service fund, C, business type activities, or D, governmental activities. Let's go through this again using the process of elimination. Which would not record depreciation of capital assets? Now, when we think about this, we would think about one, are we talking about government-wide activity versus the funds? That's the first kind of break I would think about. The government-wide activity is going to be on an accrual basis. The funds, at least the governmental funds, typically using the modified accrual, the governmental funds being the largest group of funds. The funds that are not governmental funds are the largest group that are not governmental funds are the proprietary funds, those that act kind of like a business type of organization, and those would use the accrual basis. So keeping that in mind, we're thinking about depreciation, something that's going to be related to a long-term asset, something on the normal accrual basis that we're familiar with in normal accrual. It would be in the government-wide activities under a normal accrual basis. It wouldn't be in the modified accrual basis, which would be used by the fund accounting, which is in the largest group of funds, the governmental funds. So really what we're thinking here is the depreciation would be used on the government-wide, not on the fund. So which would not record depreciation? Capital project fund. Well, it's a fund, so I would think that it possibly could be using modified accrual and therefore wouldn't be using depreciation. The second is the internal service fund. Again, it says fund. So, but the question then is it a governmental fund or not? And then C says business type activities. I'm not sure exactly what they're going through there, but I would think business type activities would go into a business type fund, a proprietary fund, and therefore it would be on an accrual basis, even though it might be in a fund because it's using accrual accounting because it's a business type activity fund, a proprietary fund. So that shouldn't be it, I wouldn't think. And then D says governmental activities. That's the entity as a whole, government-wide level, which uses the normal accrual basis, and normally we record depreciation. So it wouldn't be D. I would go between A and B, the two funds, and which one wouldn't be recording depreciation. Of the two, then the question is which uses the modified accrual basis. The ones that are the governmental funds use the modified accrual basis. That's going to be the capital project fund. The internal service fund is kind of a proprietary fund, meaning it acts or it gets revenue similar to like a for-profit type of entity, therefore uses an accrual basis. Final answer then A, which would not record depreciation of capital assets, A, capital project fund.